Welcome to the Property Corner with myself, Rowan Alexander. Okay, so in this episode, we're going to be looking at access bonds, how to use them, whether they're worth it, and how I recommend you be managing them. So in essence, an access bond is availability to money that you've prepaid. And if that's the only thing that you take from this episode, that's the most important thing to remember. So how an access bond works is when you apply for a mortgage loan and you get a loan, or whether you have the loan, it's a product that you can activate at the time of registration or at any point in time during your mortgage term. It allows you the ability to re-access any money that you have prepaid in advance of your loan agreement. What do I mean by that? If you're repaying 10,000 Rand a month on your mortgage loan, you need to repay 120,000 Rand per year. If through the form of lump sum payments or monthly repayments, you're making more than your contractual amount. So if you have repaid 10,000 Rand a month, but you also put in a 50,000 Rand throughout the course of the year when you received monies from something that you sold, an investment or bonus, that 50,000 Rand can be accessible again in the form of an access bond. You could access that money again at a later point in time. Similarly, if you had been paying 5,000 Rand extra, you would have paid off 60,000 Rand more over a 12-month period than what you would have contractually been obliged to pay, and you can once again access that money. So how does this work? The bank looks at your loan term and the repayments that you have to make monthly, and any additional payments is seen as an advanced payment of your contractual agreement. So some of you might be wondering, well, what happens to my loan term? And is my installment adjusted? So there's two ways that prepayments are handled. The first is where the bank actually capitalizes that prepayment. What I mean by capitalizing it is that they see it as a repayment of a contractual obligation, and they would then reduce your outstanding balance, but reset your loan so that the remaining term that you have is adjusted in accordance with the new outstanding balance. In simpler terms, they are resetting your loan as if you've repaid a portion of it and reducing your monthly installment. When they do that, your money is typically not accessible again. So generally speaking, what the bank would do is they would shorten the term. So they would keep your monthly installment the same, and they would just shorten the term where you would have paid off over 20 years by making lump sum or advance payments. They just reduce the term, and you're now only owing for 17 years rather than 20. That would be the default for most banks, but depending upon your loan agreement, the loan agreement would dictate how advanced payments are managed. You can just simply test this if you have an access facility by paying money into your bond, be it 100 Rand, and seeing whether that 100 Rand becomes available in your bond account to withdraw again. In the form of an access bond, that is usually how things would be managed. So I think that explains the question that always surrounds, but Rowan, if I repay additional, what's going to happen to my installment? If I do lower that installment, or if you ask for the installment to be lowered, that money is going to be capitalized and you cannot access it again. I have seen circumstances where the bank would readjust your payment, your repayment, and then when you withdraw again, they up that again. But don't assume that would always be the case. Rather speak to your bank, speak to your banker, and try and find out how they would handle that. The best way to do it for what we're trying to achieve would be to actually keep that installment the same. If you then at a later point in time feel that you want to reduce that installment, you can always ask them to capitalize a part or all of your prepayment, and that will allow you to enjoy the reduced payments. But just remember that you probably can't access that money again without going through the process of reapplying for the loan. So saving money in your mortgage bond and having it available on access is probably the smartest financial decision you can make. if you are saving money in a separate account while you still have a mortgage, bond, and loan amounts outstanding, I'll show you now why that's not an efficient way to be saving. Money that you have sitting in a savings account would generate interest at, say, 8 or 9%. It's generally less than the prime lending rate. Once you've earned that interest, you still need to go and pay tax on it. And then after you've paid tax, you would need to go and service your interest cost on your outstanding debt. So if you're earning 9% currently, say prime is 11.75, you are earning 9%, and you're still paying tax on that money, you're probably walking out with anything between 7 and 5% net, which you then have to service your interest cost of 11.75%. Whereas if you were saving that money in your mortgage account, you would not have paid, or you would have saved interest by not paying it. And that savings was pre-tax. So it's the equivalent of earning, if you can service 11.75% after tax, that's the equivalent of earning maybe 13 to nearly 20% pre-tax. So that's the biggest financial hack you can make, is by actually saving money in your loan, in your mortgage bond, rather than saving it in a separate interest-bearing account. Remember also that by saving in that account, you are automatically creating an access facility for yourself again. So that money is available immediately. You would never see those sort of interest rates on a fixed account. Even if you fix money for 12 to 24 to 36 months, you would never see the rates after tax that you would save by actually paying that money into your mortgage bond. So anybody that's got a savings account while they still have a mortgage loan, you're defeating the object. Put that money in your mortgage bond and you can have it available on Access, and you are saving money pre-tax. The beauty of this Access bond is that money which you have prepaid is available at any point in time without having to go through the practice of reapplying for a mortgage bond. So if you've dumped in a lump sum of money and you need that at a later point in time, you can simply withdraw it without having to reapply for that money again. It's important to understand this, because reapplying for that money at a later point in time, your financial position may have changed and you could no longer qualify for that money. So by dumping it in and capitalizing it, remember that if you want to access it again and you've removed the Access bond facility, you're going to have to reapply for that money. So rather keep it open, keep that Access facility open, and have that money readily available should you ever need it. So taking this all into account, let me give you some tips as to how you could actually maximize the benefit of an Access loan or Access bond. The first way that you can do that is by saving as much as possible. I've said that already. Any bit of extra money, extra cash that you have, stick it into that account. You'd have it available immediately. You're going to be saving yourself interest expense, and that's a no-brainer. But the second way that you can do is by actually opting for the longest loan period possible. Some people will say to me, Rowan, I don't want to take a long mortgage bond. I want to make it as short as possible because I want to get it repaid as quickly as possible. And that's fine. But rather opt for the longer mortgage period. So if you're considering a 20-year loan and the bank is willing to offer up to 30 years, I'd say opt for the 30-year loan. There's two reasons for that. The first is you are in control of your repayments. If you make the equivalent repayment of a 20-year loan, but you have taken a 30-year loan, that money is prepaid, and if you capitalize it, you will repay the bond in 20 years. So if you pay the higher installment, that would have been the 20-year installment, you will still repay your house over 20 years, not 30. So there's no need to extend that period to 30 years by actually paying the minimum. The difference is you are in control, and you can opt to pay the equivalent of a 20-year loan and thereby repay that. Also, if for any reason in a certain month you're not able to service the repayment of the shorter loan term, you do have that relief for yourself. So if your repayment was, say, 10,000 Rand on a million, over 20 years, but it's 8,000 Rand over 30 years, that 2,000 Rand a month could be very strong relief in a month that you need it. 2,000 Rand might not sound like a lot of money, but the month that you need it, trust me, it's going to be very welcome. The second part of that argument is that every 2,000 Rand a month that you are repaying, so if you take a 30-year loan with that 8,000 Rand a month as an example, but you actually pay 10,000, that allows you to build up an advance payment. So every month that goes by, you would have prepaid 2,000 Rand a month or overpaid 2,000 Rand a month, which gives you money available on Access. That's exactly what we're looking to achieve. So it sounds like a little bit of money, but 2,000 Rand a month after a 4-year term could be the equivalent of 100,000 Rand, which you are able to withdraw again to finance alterations, to maybe purchase a car, without having to go through financing these purchases or alterations or whatever at a later point in time. And the first thing that someone's going to jump up in the comments and say, but hey, then you're repaying it over 20 years and there's huge credit costs. Remember, you are in control of what you repay. So I've done it in my life where I've financed other asset purchases through my mortgage bond, and I've just been diligent in making the equivalent repayment that I would have had on the shorter term finance, like be it the vehicle or whatever. I've made that equivalent repayment into my mortgage bond, and thereby I effectively have the same term. I hope that makes sense. I hope you've enjoyed this episode, and I hope you can see the value of an Access bond. If you're wanting to find out how to register that Access bond, be in contact with your mortgage originator who assisted you with that home loan, or contact your bank and see whether you have an Access bond facility available and link that account to your main banking account. It's then easy for you to transfer money back and forth between that Access bond and your check or your savings account. So very easy to do. It's simple. You can do it off your app. You can do it off your computer. So I'd be encouraging you to do that. Hope you found this advice useful.